If you're looking to become consistently profitable, but so far you feel like you are stuck, there is no light at the end of the tunnel, then this video will give you the light that you need. I am going to show you a simple step-by-step process that you can follow today and start seeing the results that you want to see from the market. I personally wish I knew this strategy 5 years ago. So, first things first, if you're new to the channel, subscribe. Let's do this. All right. So, there are two games that we play when we are trading. The first is understanding the price action, blah, 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 blah. That is what most people really focus on, and they try to be right all the time. But the secret is in the other game that profitable traders understand, and that is the game of probabilities. So I am going to show you a little demonstration, and this, I can guarantee you, once you master this, you will never worry about your trading, because this is the real game that we play. So there are two things that you need to know in order for you to be really confident in your strategy. Number one is what we call a win rate, and number two is what we call a risk to reward. So think about it. When you go to your job, if you are working a day job, probably you know how much you are getting paid, and you will not accept any less if you are working. So the point here is to know exactly how much you are willing to take from the market if the opportunity is given to you. That is what we call a risk to reward. And then win rate is how many times you get paid. Another thing that a lot of traders really struggle with is losses. How do you really come to terms with losses? And it's simple. You just have to shift your view. Now, here's the thing, and let me show you. With this strategy, we need at least a 30% win rate, which means out of 10 trades, we need to win only 3. And then we need a risk to reward ratio of 1:3. Simple. So this means that if you get into a trade, the only time that you can get out of that trade is either when you lose or when you make 3 times your risk. So that means that even when price is moving up and down, you see it coming back to your entry, goes up 1 to 2, then goes 1 to 1, then goes 1 to 2.5. You just sit there and wait until price reaches your target. And then the number of times that you get these trades is 3 out of 10. Now, let me show you what I mean. So let's say we take 10 trades. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. So the first 4 trades you take are losers. All right, so -1, -1, -1, and -1. So this is where a lot of traders really struggle mentally. You have 4 trades in a row. What does that say about you as a trader? And this is where now shifting your view about losses really helps with your psychology. Because if you look at losses like you are a loser, you will become a loser. But if you look at it as an expense, because the next trade was actually a winner. So the first 4 trades, you were in -4. So if you're risking $10, that is -$40. And then the next trade is a winner. That's +$30. Now you are back to -$10. So understanding that losses are just a business expense. So it's like you need to get through those losses in order for you to get to that winner. Because you never really know in what sequence the winners and the losers are arranged in. And if you understand that, then it's very easy for you to just trade without the emotional attachment to your wins and losses. Let's continue. And then the next trade was a loser. And then we have a winner, and then a loser, and then a winner, So how many trades are those? 1, 2, 3, 4, 5, 6, 7, 8, 9. And then 1 is a loser. At the end, you are up 2%. So in your trading period, you had your winners, you had your losers. But if you add those losses and wins in a specific period, you are still up if you stuck to the plan, if you did not change your strategy. And this is exactly the strategy that I am talking about. I wish I knew this 5 years ago, because this one has changed the way that I view the market. So this means that if you understand this game, then that means that it's very easy for you to stick to your plan, because you understand that it's the plan, it's the rules that you have from trading technical analysis that will allow you to play this game. So how do I use now technical analysis to really play this game? So first things first, we need to know how to really predict the market. And you don't need to be right all the time. You just need to have an edge in the market. So what this means is that if you look at a candle, say one candle like that, it's very hard to say where the next candle is going to go. You don't really know. So you wait for this candle to give you the high and the low. So say, for example, that is the high and that is the low. Now, the next candle has a potential of actually giving you a signal. So this is the thinking. If price breaks out the next candle and closes above the high or the low, so we'll just use the high, then that means that is a breakout. And a breakout has a very high probability of continuing in the direction of the breakout. So our goal is to trade on this third candle. Simple. So if you can be able to predict this one candle, this means that you have an edge in the market. And this means that if this candle breaks out but fails and closes back inside of the high and the low like that, then you have a very high probability of getting a reversal. Beautiful. So think of this on the daily time frame. So this means that you can predict a whole day simply by just looking at two candles. It's as simple as that. So your goal is now to come on the screen on this specific trading day and just identify the market as it's moving in your predicted direction. So this is what exactly happened on oil yesterday. And we took this trade live here on YouTube. So very simple. Monday sets the high and the low of the week. So Monday is this first candle. All right. So when we go to Monday, this is Monday. This is the low, this is the high. Tuesday breaks out, gives us a breakout, no problem. So we are interested in failed breakouts. So Wednesday stays inside, Thursday breaks out, no problem. And then Friday stays inside, and then on Monday, price broke out and then closed back inside of the range. So it's the same as this candle giving us a high, and then this candle here breaking out and then failing to break out as a breakout, closes back inside of the range, which means that now we have a failed breakout. And the next day has a very high probability of reversing. So our goal on that trading day is to identify and time the market as it's reversing. So when we came to the screen yesterday, now it was on Tuesday, it was in the New York session. And we were using the 5-minute time frame. And here's the thing. We want on this particular trading day to stack the odds in our favor. So that means that we are timing the market, but we also want to get in after we are very sure price has a very high probability of going down. So how do we do this? We just wait for price to clear liquidity at the high of the week. So this high here at 620, this was the high of the week, but in the New York session, price comes back again to that high and clears liquidity. Beautiful. So now we know we have other time frame traders in the market that can drive the market down. All right. Now that we have cleared liquidity, we look for our levels, and we had this nice level here. But also notice that we have a reversal pattern here. So we have this left ear, and then we have the head, and then we have a right ear. So this is what we call a half Batman. So think of Batman. So you have the ears going up, and then you have the head. If you see this pattern, this is a clear reversal pattern that you can use. And so the moment price broke out, that is our entry, and then our stop loss is a few pips above the breakout candle, and then we were targeting the low of the day. Now, another thing that's very important is understanding your exit strategy. So, number one, we are targeting a 1:3 or more. That is our number one exit strategy. Either price takes us out from our TP, or price breaks out and stops us out, so we lose. Another way we can get out is if price does not really move and just consolidates the way it did, we can also exit at the close of the day. So in the morning when I woke up, it was in the Asian session, I got out, I think at around this level here. But the reasoning behind it is the end of the day. So that is another way you can get out. Simple. So now you have a simple way that you can use to actually analyze the price action. But remember, we are not playing the game of price action. We are playing the game of probabilities beneath the price action. And that game is what will guarantee you that you will see profits in your account. It's as simple as that. If you got value from today's video, subscribe. And if you would like me to work with you to teach you how to apply this strategy, check out the 90-day challenge. Link is in the description. All right, I will see you in the next video. Peace out.